Final panel, if you thought that decentralized exchanges were a dream, or if you're a real believer in centralized exchanges, we've got people who have sat on both sides of their camp here. The moderator is Patrick Barron from a company that's guided over 30 companies through the ICO, Ambersafe Financial, and they operate and love their exchange. Patrick Barron, over to you.
Thank you. Thank you, guys. So if the panelists would like to go ahead and come up and join me, I think probably getting some microphones. So
mics are here. There's Richard.
Yeah, I'll just give a brief introduction of myself while we're getting set up. So Ambersafe, as he mentioned, is an ICO services firm. We've helped over 30 companies launch their ICOs. Cumulatively raised about $260 million. The good folks from Task Funds, we worked with them when they did their token raise. We also recently launched an ICO hosting platform and decentralized exchange called Orderbook, which aims to give a regulatory compliant way for companies to both launch a token sale as well as facilitate secondary market trading. So it's quite an exciting space, and appreciate all of you hanging around for the final talk of the day.
Konstantin, are you here? Can you come up? No, we're not Konstantin. Okay. Pavel, are you here? Pavel, go for it. Grab a microphone on your way up. Pick a lucky number.
All right, please have a seat.
I'll see if I can find your last panelist.
So, Pavel, Richard, thank you both for joining us. Please give us an introduction on who you are, your background, and take it away.
Hi, everybody. I'm Pavel Kravchenko. I'm from Ukraine. My background is cryptography. Actually, very few cryptographers here. I'm a PhD. I used to work in security companies, and I joined the blockchain space in early 2014. When I was in Silicon Valley, and guys from Stellar, there was only two basically of them, they took me on board, and I was doing some cryptography work for them. It's funny that organizers put me on the last panel about decentralized exchanges, because I usually talk about tokenization. That's my kind of main topic of interest. And maybe that's the reason, because I usually scare off all ICOs, because I say that utility tokens is kind of leads to a creation of Ponzi schemes, because when you issue a limited amount of tokens that is required to pay for unlimited amount of services on the platform, then you have a problem. Yeah. But I am a founder of Distributed Lab, and we are software developers. So we are 50 people, sitting in Ukraine, and we've been building decentralized exchanges too. So that's one of our specialty.
Thank you. Richard?
Great pleasure. Okay. Great pleasure to be here. Great pleasure to be here. My name is Richard Olsen. I'm founder of a company called Litecoin, and we're building a global exchange for all asset classes and instruments on blockchain, ideally decentralized, but in reality today centralized, and the future is a kind of very complex setup which embraces the different concepts altogether.
Mm-hmm. Thank you. So quick show of hands, how many people here have used a centralized cryptocurrency exchange? Excellent. And how many people have used a decentralized exchange? Okay, pretty high majority. And that's surprising, because something like 99% of the trades currently go through centralized exchanges. And as we've seen, there are some fundamental flaws with centralized exchanges in that over $2 billion has been hacked and stolen over the past decade. And so, why do you think this is? It seems like the centralization, a centralized exchange, is antithetical or against the idea of the blockchain and kind of the ethos of the blockchain. So why do you think it is that so much trading is happening through a centralized system when the idea is to decentralize everything?
So few people realize that actually financial markets are far more complex than we think. And when you trade on a financial market, you're really interested in two things. One is you give over your assets, you want to make sure you can get them back again. But the other thing which you're very much interested in is actually to get good prices on your transactions. In a decentralized exchange, the person who makes a market that offers you a price physically has to have all his wares there. That if you buy Bitcoin, he physically has to have Bitcoins. In a centralized exchange, you can have a market maker which doesn't physically have his Bitcoin there. He can actually make a market without them physically being in the store. So it's clear that the guy with the centralized model who doesn't physically have to maintain the Bitcoin can offer more aggressive prices. So what do you prefer? Efficient prices, in a sense narrow spreads. A centralized model is better. And the decentralized, you have security. So this is why actually both models will exist in parallel.
So that leads to a more fundamental question. What are the main differences between a centralized and decentralized exchange?
Yeah, the main difference is that when you use decentralized exchange, you hold your Bitcoins with yourself. And when you use centralized exchange, your Bitcoin or your crypto is somewhere. So right now, there is an interesting situation that every centralized exchange basically acts as a bank, so a clearinghouse and a depository, as well, also for fiat and for crypto. So which means that you have to, you obviously have to deposit it somewhere. And in case of exchanges, you deposit to some random, shady guys very often. Yeah.
Hopefully not. Richard, anything to add to that?
Now, also, I mean, if you look back, I mean, even a kind of a conference such as this was unthinkable 3 years ago. Today, the world, there is really it's breaking up. People see the new frontier. But we also have to realize we're at the very start. Think what's happening in all these different brains which think about what we can do. There's such a lot of innovation. So the issue of a centralized, decentralized exchange, you have to think in the context of a rapidly evolving world where we'll set up very complex exchange structures to really capture the different needs. So a very simple categorization, for me, doesn't fit the game.
Mm-hmm. Yeah, so as Pavel pointed out, the centralized exchanges typically act as either a custodian or an escrow for the private key. The other criteria that I typically use to define centralized versus decentralized is the matching engine and whether or not that's on-chain or off-chain. Would you agree with that, that a decentralized exchange must have a matching engine that's on-chain?
Yeah.
Yeah.
But the question, which chain, obviously, because most of previous panel was about funds and previous about investments, and these guys, they obviously used to traditional financial infrastructure when it all works, right? And the chain for them, it's some type of a depository when they, just the assets that are on Ethereum, they obviously can be traded natively on Ethereum. If asset is not there, obviously it cannot be traded. You can only trade IOU, for example, Ripple does. So Ripple is another good example of decentralized exchange. So if you have a chain between participants who are trading, even if it's not traditional public network, it's still, I think, it says on-chain. It's technically, you can create an exchange, a centralized one, that signs every transaction, that reaches consensus about every match, every bid, everything. So technically, you could say it's on-chain because everybody agrees on the situation. That's what people had like 400 years ago when they came to some city to trade, you know, apples, you know, potatoes. Imagine you're inside the city and you just offer your fruits to the others. And if you don't deliver, you'll be bitten, right? So it's on chain. You cannot escape the city. So that could be reached by a multi-sig also.
And so you hit on a good point that decentralized exchanges typically can only act and trade the assets that are native or derivatives of that chain. Hi, welcome. And so this brings us to the topic of atomic swaps. And so, you know, do you think that atomic swaps being the ability to trade native currencies of different blockchains in a trustless manner, do you think that this is a reality? Are we going to see a true atomic swap solution that facilitates decentralized exchange between different blockchains?
I would say yes, but I don't understand now why it's not happening massively.
Well, I think that it's a difficult solution in terms of you know, the ability to trustlessly go between asset classes and go between blockchains when the blockchains don't natively communicate with each other. That's kind of the crux of the problem. Perhaps we'd have our last guest do a quick introduction and say hello to our audience.
We have a decentralized panel.
Yes, I'm sorry for the timing. It's just half an hour later. So I'm Konstantin Gladic. I'm the CEO of Changely Instant Exchange. So we have about 2 million registered customers on Changely. So we are doing about $500 million monthly exchange volume. And so we are mostly famous on the US market. It's 50% of our customers, and Asia, South Korea, Hong Kong, Japan, it's about 30% of our customers, and also from Great Britain and Europe. So, and we are centralized, but maybe on the next question I can answer about the atomic swaps.
Yes.
You have asked me. As for us personally, we realize the potential of the atomic swaps technology, but we understand that it will just take maybe half a year or 1 year to build any kind of a product based on the technology. Because for the atomic swaps, you should wait for confirmations, and also it's a chicken-egg problem, because you need to find someone who wants to sell coins, and if the deal is broken, you should wait for 2 or 5 hours. It depends on the conditions for the smart contract to unlock funds. So it's, I think, on atomic swaps, you can easily build peer-to-peer trading, but not regular exchanges because it's unavailable for high-frequency trading.
Mm-hmm. And so, on the topic of high-frequency trading, one of the current limitations of decentralized exchanges appears to be the throughput of the network that it's on. Have you seen any solutions, and do you think that high-frequency trading will be able to be accomplished in a decentralized way?
For a high-frequency trader, not to be provocative, it's not important at all. Mm-hmm. Because actually, when you do high-frequency trading, you don't physically have to move the assets in and out. You anyway only deploy a small fraction of your assets. So you're putting at risk in a centralized model just a small fraction of your equity, which anyway is at risk from the market. So the setup for high-frequency traders and priorities are very different for someone who's physically interested to do an atomic swap and physically get one digital token against another one and then do something else with it.
Mm-hmm. Excellent. And so when it comes to regulations and regulators, there's a theory that decentralized exchanges have the ability to circumvent the system. Because if they operate as a DAO, for example, do you think that regulators will have the ability to have influence on these types of exchanges that operate kind of independently of any central governing body and without any particular people in charge? Or is the heavy hand of the state still going to be able to reach these types of exchanges?
I think yes, and the easiest way is to control end-user endpoints, like mobile applications, websites, or software. And people often think that Bitcoin provides them security from like government actions. I think it's not. Because if, for example, US government will tell to Apple, Google, and Microsoft to remove all the wallets from the stores and from devices, they can easily do that. I mean, if there is enough like political power, like in 30s when the gold was basically taken from citizens, so it can be done. So it's only like a partial solution. If you live in a particular country and you use particular online services, then you're still vulnerable.
So Facebook has lots of users worldwide, but they fight their users. So they do not have the support of the users, and when they're confronted with the state, they don't have the same positioning as if you have 10 million, 500 or 500 million users behind you and represent the interests of those. So I argue that the state will react very differently if you have actually a big audience which you represent and represent their interests. And whatever that player does will be accepted as regulation.
So on that topic of having a very large user base, how can this technology reach the so-called bottom of the pyramid and increase financial inclusion?
Sorry. So I just want to add some options about the government's control.
Yes.
Because I disagree with you. Why BitTorrent it's still working? If it's illegal in the US but it's still working.
So it almost doesn't work in the US.
I
Try to start it and wait.
Yeah. I know that you will got some. So legal stuff, and if you use BitTorrent in the US. But for me personally, I'm always asking why Bitcoin is still legal in the US, because it's opposite to dollar. And US is always operates dollar like a currency and earning money, just printing new dollars. And you can't just print Bitcoin. And I suppose you can't stop the progress. And if you stop the progress, so you just like a country from you're not modern country, and your customers, your elections, you will be not elected in the next in the next time.
Excellent. So earlier today, or did you want to add to that?
You had a question.
I did have a question. Yes.
For me, mass distribution is very easy. If you have a really slick, sensuous product, it will immediately be distributed. So it's all about quality of execution and create something which is truly seamless.
I have simple options. Either you add a dating feature, or you just give free money.
So earlier today, Olga, in her presentation this morning, she said that in the same way that the largest taxi company owns no cars and the largest hotel company has no real estate, she believes that the largest bank or institution will also own no assets. And this was alluding to the future dominance of decentralized exchanges when it comes to traditional assets like equities and bonds and derivatives, et cetera. Do you agree with that sentiment, or do you think that that's far-fetched?
Unfortunately. Are you asking like this year will be a year of decentralized services or decentralized exchanges?
Well, what I'm asking is if an exchange is non-custodial, and that the exchange itself does not control the keys, it's not an escrow service, then are we going to see the movement of traditional asset classes over into a decentralized setup on a mass scale, or not?
As for me, I see, okay, you can be custodial service and custodial risk-free, but your order book will be still centralized.
In what way?
Because, I know about the Ripple, and Ripple today is the biggest decentralized exchange actually on the market. But even if you are talking about the high-frequency trading, it's almost impossible to do even on Ripple blockchain. And so I know that on the traditional markets, so most trades are coming from algorithms, from trading bots, etc., etc., etc. And I think both markets will coexist, like decentralized options and centralized exchanges.
Centralized exchanges will be the price setters, and the decentralized markets will actually just copy those prices. This will be a reference benchmark. And the centralized exchanges, as you know them today, they'll disappear. The future of centralized exchanges is something very, very sophisticated, with a lot of features which will actually fine-tune the flow through it, also second-by-second interest rates, payments which will be made to steer liquidity. And this will be relevant for people who manage large pools of assets, and that can be also assets of all of us, which are invested in coins, which are part of this liquidity provision. And when you then want to peer-to-peer exchange, do an atomic swap, you just use this as a basic reference price.
Thank you. Pavel?
Yeah, I think that the custodian component will obviously be like externalized. Exchange will be purely information service. And I see the development of this is like you have a few escrow agents and users come and they select which common escrow agents they trust, and then they create multi-sig. That's how you can achieve like relatively high speed, high frequency trading without giving up your keys to exchange.
But
then I find something which people underestimate. Today we're used to kind of cryptos, which are kind of true raw materials. If you lose your private key, boom, someone walks away with it. The future is that things will be tokenized, and it's a representation of another asset. Those tokens can be at any time cancelled. So this kind of changes the kind of priority and kind of safety concerns, because if for a reason attacked, you just cancel those tokens.
Great. Do we have any questions from the audience? Yes, sir.
Please say your name and then the question, please.
Hello, I'm Vincent Rouge from Token Estate. Everybody agrees that in the coming months and years, 90% or 99% of ICOs will be crypto securities, asset-backed tokens which are backed by regulation, which means they will not be escaping, conducting trade in a regulated fashion. What's your take on that? Where will those crypto securities will be trading in the future? Thank you.
That's a great question. So our approach has been to go down the regulated path. So we have submitted an ATS license application with the Securities and Exchange Commission in the United States. So this will allow for secondary market trading of securities. I tend to agree with you that that we are certainly going down that path where the majority of the tokens will be classified as securities. We've taken it a step further in that we've created a regulatory aware protocol that knows where the issuing jurisdiction is, where the buyer and the seller are located, whether or not they've gone through Know Your Customer, anti-money laundering checks, accreditation verification, if there's a time lockup on the security, given the rules of the nation where it was issued or where the buyer and seller are. And we're adding more and more nations to this protocol so that we can create a global framework for tokens to trade in a compliant manner for the issuers and for all the participants.
But then it will be centralized.
Well, it's still decentralized in that the user controls their private keys and the matching engine is hosted in a smart contract. So the decentralized nature of it, the pieces that you could say are centralized would be the KYC checks, the AML checks, and the accreditation checks. But once you go through the onboarding process, then the trading aspect is still decentralized.
Any other questions before we wrap up? Patrick, I'd like to actually, if I can, have a last word, which
Please.
is great. So thank you, firstly, for holding together a fantastic panel. Not always agreeing, which is even more interesting for the audience. And I think picking up on the comment that Olga made this morning about a future where perhaps banks don't hold your assets, well, there's one good thing about that. They can't lose them for you. With that, we'll wrap up. Thank you, everyone.
Thank you.